We are proud to announce the 2019 Palisade Global Hard Asset Conference, taking place on Jekyll Island from May 16th to May 20th. Speakers confirmed include one of the most successful venture capital fund managers within the resource space, Marin Katuso, legendary mining investor Paul Matizek, former hedge fund manager Mike Alkin, and CEO at US Global Investors, Frank Holmes. All these guests, plus many more to be announced. Sign up now for more details and to be included in our special guest list. Join us in Jekyll Island and become part of a growing number of investors who are ready to take advantage of a coming resource boom. Welcome back to another episode of Palisade Radio. I'm your guest host, Karema Mutlu, and on today's show, we have Steve Todoruk, investment executive and well-known geologist at Sprott Global. Welcome back to the show, Steve.
Morning. Thanks for having me.
Let's begin by talking about your investment style within the resource space. In the past, you've talked about waiting for a good economic drill hole result to be released, and then you do your research on that particular company. A lot of speculators would suggest that you should get in before the drill hole result so you can ride up the excitement in the stock price. But your argument is that there are simply too many junior exploration companies around for you to know who will have the great results. Can you talk a bit about that and your investment thesis once you do find a company that has released some credible news?
Sure. I think you hit it right on the head there. Let's assume there's 1,000 juniors in Canada and 1,000 juniors in Australia. I've been in the mining business probably 40 years, and I'm not aware of anyone that's able to regularly predict which junior out of those 2,000 companies is going to repeatedly or several times make new discoveries. Somebody always owns shares in the company that makes a discovery, and they'll always tell you that I knew this company would make a big discovery. Well, again, show me you can do that 3, 4, 5, or 10 times, and I might start to believe you. So, the most exciting thing in the mining industry is if a little junior makes a brand new, big quality discovery, the stock goes way up, and then a big mining company comes in to take them over. And the investors that rode that share price all the way make a lot of money type of thing. So I wish I had a crystal ball that I could rub and I'd find out, who is going to make the next discovery. I explained you can't do that. So I try to use my knowledge to get into new discoveries, right after they're made and announced. The first discovery announcement, that's usually going to be discovery drill holes. A company just wound up and drilled a geophysical anomaly and they got lucky. Most companies that go drilling geophysical anomalies are going to drill dusters, but that's for the most part the way of the future, drilling geophysical anomalies. Everybody's got anomalies. The question is, which anomaly is going to yield that good discovery drill hole that shows you that mining property can make good economic grades of whatever mineral they're looking for over good mineable widths, whether that's going to be an underground mine or an open pit mine. And I believe it, usually the lowest time to get in, not being able to rub the crystal ball, is after the discovery announcement. If you want to play it safer as an investor, let the company drill 5 more holes, or even safer, more conservatively, drill 10 holes or 20 holes. But the more holes that you drill, you would expect that if they keep hitting, growing the deposit bigger and bigger and bigger, it's getting more and more valuable. The market's always doing its things, revaluing the company and, pushing the market cap and the share price higher.
Very good. So, Steve, is there a tendency for a spectacular drill hole to actually hurt a junior explorer? And what I mean by that is in terms of follow-up results not being anywhere near the grade or the thickness associated with the first hole, which can destroy the stock price in the short term and the investment mentality for investors who have ended up buying at a much higher price. In a perfect situation, would you prefer the grades to be good, not spectacular, but then to improve as the drilling increases? What are your thoughts?
Yeah, I'll try and answer that a few different ways, I guess. Yeah, I would like the first drill results to be just solidly good, not spectacular. If you're at the end of the day, if a company ends up with a good sized deposit, let's say it's big, it's good quality, it's good grade, Ideally, there's going to be a nice high-grade zone within that overall average grade deposit. And ideally, that high-grade zone is going to be easily accessible in the early years of the mining life. Because if anytime anybody builds a big mine, it's going to be expensive. You got to go to your friendly banker for the most part, borrow money. You want to pay that banker back as quick as you can. So if you can start out mining a high-grade zone right out of the gate, you can pay your banker back quicker. And that's the ideal scenario. Most deposits will have a high-grade zone somewhere within it. Ideally, you want the high-grade zone close to where you can get at in early years, i.e. not really deep, so that it's too expensive to get at it until a long way down the road. So that's why I'd like to say that, yeah, ideally this stock goes, good results, keep getting good, and then 3 months, 6 months, a year down the road in drilling, all of a sudden the company announces some really spectacular results, let's say, i.e. indicative that there's a high-grade zone there. The market will like that versus if you announce spectacular results right out of the gate, for the first, news release, the first 3 or 4 news releases, and then a couple months down the road, they move the drill or they come out of that really high-grade zone into still good grade, but the market gets spoiled. If you give the market or investors, spectacular results, they instantly want that all the time. Anything less than spectacular isn't good enough and meets with disappointment, even if the results are good afterwards. So there's that line of thinking. In an ideal world, yeah, I don't like to see great results right out of the gate, but in one stock that I got my clients in with this approach, Aurelian Resources, they made a big gold discovery in Ecuador, I think around 2006, 2008, the Fruta del Norte that Lundin Gold is now building into a mine. Right out of the gate, they announced spectacular results, and they literally just kept announcing spectacular results all the way for 2 years. But that's almost one of a kind. That doesn't happen very often. Can you see spectacular results right out of the gate, and then that hurts a company? In the example I just gave you, that it'll hurt them somewhat, but not a death blow type of thing. Whereas here's an example. I think it was about 4 or 5 years ago. There's a junior called Colorado Resources. They drilled a really good hole. It wasn't spectacular, but it was really good. Nice wide interval of good economic grades of copper and gold. I think they called it their North Rock property up in the Golden Triangle. The stock went from something like 15 cents to maybe it was $1.40 based on that first drill hole. That's a classic discovery reaction. But then when you move the drill over, you got to hit that again. Either somewhere around those grades or better, maybe a little less, but it's got to be something close to it. Well, they moved the drill over and never repeated another drill hole like the first. That's what we call a one hole drill wonder. How is that possible? How does that happen? How could you have, nice wide interval of those good grades, copper and gold, and it goes nowhere? Well, you can get faults that can, cut things off or mineralization. Different things can happen and they're head scratches. But there's an example where, yeah, if you bought in, when they announced that first hole and the stock was tearing up from 15 cents and you bought it at $1, maybe it hit $1.40 briefly for one news release and then it came crashing down. That's a death blow. And one hole wonders don't tend to happen that often, especially when you get wide intervals of good grades. But every now and then they can, and they're brutal.
Do you feel that going forward, if we do in fact have peak gold and the deposits, the high-grade deposits, are becoming harder and harder to find in the gold industry, are majors more willing to finance or partner up with juniors at an earlier stage of the exploration cycle? Do you see this trend continuing? What are your thoughts on this?
Believe me, the majors don't want to partner up on really early stage stuff, but they might be forced to do that. And I believe that in the last couple of years, we've seen a number of examples of that happening during the 4 to 5 years of the bear market that was horrific at times. The majors were too busy cutting costs, laying off all their geologists, cutting their exploration projects, just trying to get their financial house in order so they could survive the bear market. So the last thing they were thinking about was exploration or looking for new deposits. And then in 2016, when gold started to go up and the sector got better and the company started making profits, after 1 to 2 years of making profit, they start feeling good and saying, let's go what's in the pipeline, and really there's nothing in the pipeline because we haven't been doing anything. And that also included the juniors during the bear market. They were doing nothing. It was horrific. And so when we came out into a better market in 2016, very few juniors had been doing anything. And now everybody's scrambling, and the juniors say, okay, well, the game looks like it's on again. Things are starting to happen. They go out and start getting properties, and the companies that could raise money. The majors were forced at very early stages. I can't recall when I last saw that happen. They were doing deals, and I was saying, what are they doing? Well, I knew what was going on. They're desperate. They were prepared to go down the ladder and partner up with, groups that they maybe knew of, the management team, or they had track record, and their address on their property was kind of okay. At a certain point, it does go even a little higher. I think the majors will get pickier, and we've seen Newmont taking over Goldcorp. I think that was a large part of why they did that. They had no new discoveries of their own, and there was no newish 5 to 10 million ounce or Newmont-sized gold deposits out there. So they said, well, we got to do something to try and grow the company or have something in the pipeline. So they took over Goldcorp, and I don't know why. The obvious merger that should have happened has been talked about for decades is Newmont and Barrick merging so they can consolidate their assets in Nevada and Australia, places like that, which would make all the sense in the world. Why Newmont is merging with Goldcorp, it's to get whatever Goldcorp had in the pipeline, including their smallish mines.
Before the interview, Steve, you sent me a great video you did a few years ago explaining how you assess these exploration juniors and some of the winners and losers that you've been a part of during your career. Let's talk briefly about some of the mistakes. In the video, you talk briefly about perhaps holding on too long for a junior, or if the high-grade results don't continue. Can you talk a bit about this?
Say for someone like myself or someone that's running a biggish fund, we have to do things differently than, say, an individual investor that's going to put $5,000 or $10,000 into a stock. If my clients, listen to me, if I make a strong recommendation and we all buy a significant amount of stock, we can own 5 to 8% of the company. Well, once you could sit there and pick away buying it over a month, 2 months, 3 months, till everybody's got some, and now you got that big position. How do you sell it? We've got a nightmare on our hands at that point. We need a happy ending. We need to see a successful ending here, which I'm hoping is going to result in a big company coming to take us over, and then we're out. We can sell it all instantly. Whereas if you're an individual investor with $5,000 or $10,000 in the stock, you can get up any morning and sell that and not hurt the stock. So that's kind of, I've got to make a decision, and I might wear it. In the case of Serengeti Resources, was around the time of the Colorado discovery, and everything was going nice for, I think, a good year. The stock probably started out at 50 cents. And when they announced their discovery drill hole over the next year, good results are coming, and I think the stock got up to $4 a share. Then they moved the drill over. We don't yet have a big enough deposit. It's going in the right direction, but they moved the drill over, and it's gone. They hit a fault. The deposit's faulted away. We don't know if it's eroded, if it's deeper, if it's sideways. They still, to this day, haven't been able to find it. So when a company announces that it's faulted off, that's it. The game's over. Lights are out and the stock tanks. We had no option from when the company announces those negative results, and when the stock opens, it instantly opens lower. It's not a gradual, share price decline. It's instant. It's over.
As we begin to wrap up the show, Steve, is there anything else you wish to discuss today? Perhaps we can get your thoughts on gold or any other commodities?
Kind of touching on what we just did there, there's, you never know from when a company announces the discovery announcement to if you have that successful ending where you're going to get a takeover. There's very few stocks that go up every single day or every single week, and usually not every single month. There's always going to be different bumps in the road. There's going to be some tiny bumps, some small bumps, medium-sized bumps, and big bumps in the share price, which means you're going to see it. If you're looking at a stock chart, it can keep going higher and higher and higher, and then it can come down a little bit, a lot, or it can tank. And it doesn't mean that there's a fatal flaw in the story. If you're eating and breathing it and you know what's going on, more times than not, it should work out okay. There's a couple of current examples I think most people would agree are some of the top success stories out there right now in the junior sector that started as discovery plays, and they're both trading at all-time highs right now. Wesdome Mines and Silvercrest Metals, they both started, call it below the $2 level when they really started announcing good high-grade results. And I think both of them got to $3.50, $4 a share, and then they both just tanked. Silvercrest fell from over $3 down to low, just over $1 Canadian a share. And Wesdome similarly, I think, got up to close to $4, and then it just tanked to $1.70 early last year. And in both cases, there was nothing wrong. The companies each kept announcing good results, growing the deposit bigger and bigger. In the case of Wesdome, they announced after probably a year of good results, they were drilling from an underground tunnel. They couldn't move the drill over anymore underground because the tunnel stopped. So the company had to announce, we've got to take a 4 or 5 month pause in the drilling while the miners go underground and extend the tunnel 400 or 500 meters so that we can come back in and keep moving a drill over. Well, it's like the market thought there's a fatal flaw in the story. There's going to be a 5 month pause in the drilling activity. So the stock just tanked to $1.70. And then when the tunnel was done, they brought the drills in and they kept drilling. And guess what? They kept hitting, growing to the point where today it's gone from $1.70 early last year to trading at an all-time high right now at $4.83. So there's no need to panic and exit for the gates. It might take a little bit of patience. And that's not asking too much type of thing when you're investing. Overall, in the gold space, I've been very pleased with what's happened in the price of gold the last couple of months, moving from down around 1,200 up to 1,300 level. Just before Christmas, I think we could say across the board that, with the nice rise in the price of gold, that just about all the gold producers have moved up very nicely. So you'd expect to see that. And then the next thing you'd expect to see is for the trickle-down effect to reach down into the juniors. And you'd think that the first juniors to move in that scenario would be the best juniors. And I'd say most people again would agree that Wesdome and Silvercrest are two of the best success stories out there. They've moved very nicely, in that time frame as well. We still haven't seen the trickle-down effect go much lower than that, into the juniors that have promising plays or, some early indications they might have something going on, but they haven't made a good-looking discovery. So I think we're still a ways, whether that's going to mean that we need $1,300 gold to stay here for 6 months or to move up to $1,350. I'm very sure that if we had $1,350, $1,400 gold and it was looking like it's going to hold, you would really start to see the trickle down into the juniors. But I don't pick my stocks betting gold is going higher. I want to see the high grades that can be mined economically at today's metal prices, and even better, that could be mined at a lower metal price than what we have, because anytime you build a mine, there's going to be some really lean years where the metal prices go down in the commodities.
Excellent. Some very good insights there, Steve. Well, we appreciate your time today, and we'll have you back on the show again very soon.
No problem. Thanks for having me.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?